All right, welcome to another backtesting session. My name is Paul McMillan, and we're going to do a backtesting session on the trade that I took this morning. I'm going to actually show you proof of what I profited. And so it is November 9th, 2021. So let me pull something up here. Okay, got that. So I'm going to show you the process of exactly how I marked up my charts and then exactly how I was able to profit. I did suffer a short loss because I thought a trade was going to go a certain way, but then I decided to close that trade with a small loss. So I was able to recover that and then profit on the next trade. So I'm going to show you how that process went. All right. So let me turn the auto save off. No, I'm going to keep it on because I remember what I did. So the first thing I did was mark up the market structure from the 15-minute to the 4-hour time frame. So we're going to go all the way to the beginning. All right. Let me pause this recording until I get to the beginning. Be right back. Okay, so now we're at the beginning. So what we're going to do is, this is the beginning. So we're going to start marking up market structure. Okay. So I'm going to actually start from the bottom, work my way up to the top. So we're going to mark up here, change this to yellow. Going to mark it right here. Mark it up here. Mark that right here. And then up here. All right. So then I'm going to go ahead and mark up my supply demand zones. All right, so let me change the coordinates of these zones and be right back. Okay, now we marked up everything on the 15 minutes. So we're going to start on the 30-minute time frame now. I'm going to repeat the same old process. So let's go all the way back. So now I'm going to actually put a vertical line right up in this area here. This area here. All right. So then what I'm going to do is start drawing my zones here. Let's change these to green. So basically, I'm just marking up market structure here where these horizontal lines lie. Oops. All right. So now what I'm going to do is just change the coordinates of these zones. We'll move on to the 1 hour. All right. So a 30-minute time frame is marked up. So now we're going to go to the hour time frame here. We're going to mark up the rest of this. So we're going to put the vertical line here. Put a zone here. One up in here. One up here. I forgot to change the colors to these. All right, then I'm going to start marking up supply and demand zones with this. We're going to make this red. All right. Then we'll move on to the 4 hour once I get done with this. So now let's move on to the 4 hour. So as we can see, we marked up all these market structures already to a current price. Now at this point, price was oversold at this point. So what I decided to do was actually draw a zone kind of like to here, just to let me know that this is the overbought zone, and price pretty much hit that. So now we got that drawn up at this point. Then I want to go back to the 15-minute. Matter of fact, no, I take that back. On the 4 hour, I'm going to actually mark this up. So we had another one here. And we can make this, didn't I have a purple line? We could just say current price. We'll just make it white. Another one here. And we could just make these red as well. Change the coordinates to these. All right, so we'll see where these lie on the 15-minute. So let's go to 15 minutes, see where we're at. All right, yeah, perfect, perfect, perfect. Got zones down here, yep. So now at this point, marked up all our mark. All right, sorry about that. My computer was having issues. All right, so now, so basically we marked up market structure from the 15-minute to the 4 hour time frame. So now the next thing we want to do is identify the trend. Now, when I look at current price, I see that price was ranging. It was hitting order block here is supply demand zone, even though it's not valid because the banks did mitigate a lot of this zone area and this imbalance area, but it's still ranging. So my rule of thumb is if price is ranging, I'm not going to trade it until I see a breakout. Now it's a different story if price is clearly trending upward. Let's say if price kept on going up to here, or if price kept on continuing down to this downside, maybe continue down here, then I probably would have sold. But no, price is ranging back and forth. So the very next thing I'm going to do is I'm going to use my higher high and lower low risk strategy indicator. Okay. So that's what I'm going to turn on. And what I do is I looked at the most recent high, which is here. Okay. And then the most recent low, which is down here. But sometimes I kind of tighten it together and kind of, push it closer. So that way I can set my lines that's going to alert me when price break either one of these lines. All right. So I put one here. And then this was the most recent low because price did have a small uptrend here. In a sense, but price was still kind of ranging. Okay. So what I look for, so then what I do is I basically set my lines, and I call these lines really supply demand zone lines for break and retests. That way I'll set alerts for those. So that way if price breaks either one, then I'll know whether to buy or sell. So this is going to be the demand zone right down here. So then this is probably good enough. Honestly, sometimes I might look at the most recent low, definitely the most recent high, but sometimes I may bring it closer to see which one breaks out first. I'll just keep it right here. I'll just keep it right here on the most recent low here. Most recent lows, yeah, right here. We'll just keep it there, and then I may adjust accordingly later. So that's the next thing I do. Okay. Now, then what I do is I turn on my order block indicator and locate the order blocks. So now, what I try to do is when I locate the imbalances, I do mark them with horizontal rays. Okay. So that way I can, that way they're more visible. Then I look at the most recent uptrend. So here price created an imbalance in this area. They already mitigated this imbalance here by basically coming back to fill this imbalance. So that way the banks don't lose any more money on the previous orders they weren't able to close, like these previous sell orders. So they mitigated this area. Okay. Now, they still have to mitigate all of this area as well. Okay. So they filled half of that, but they still have to come down and fill all of this here. That's what they're going to have to do. But eventually, they're going to have to bring price back up to fill this imbalance area that this previous sell did as well. Let me actually mark that. All right. So that's what they had to do. Okay. So my thought process says, and this is the reason why. Now, when I turn this on, based on waiting for this breakout, I might actually just move the breakout up to here, since they got to mitigate and fill this order. So I might wait for a breakout at this point. So that's why I said before I might adjust it. Okay. And then I'm going to turn this back off. And so now my thought process is, okay, so either they're going to mitigate and bring price back down. Like this created an imbalance as well. So they're probably going to bring price back up to fill this, mitigate this area, and then probably sell it and probably rise it up to get more momentum to actually sell price to fill all of this mitigated, this imbalance here and mitigate that. Okay, just like I mentioned before. So because of that, what I do is I take my risk to reward tools and basically I set them, and basically I try to, I either market execute or I may set pending orders. Okay, so here, see from here to here, this will be my take profit one. Okay. And then of course, this would be my entry. I might even put my pending order for a sell stop here. Then of course, that would be my stop loss. Then I'll set a pending order for a buy. Just in case a price happens to maybe fill in half of this order here and then decide to fill in this order and then buy it up and it crosses and then fill this order and then create an all-time high. So I want to prepare for that as well. So then typically what I do is I like to set up a buy stop, okay? Or I might market execute depending on the situation. So then from this entry here, this will be my first take profit. And then up to here, maybe up close to this zone, second take profit here, okay? All right. And then I set those pending orders and then I wait to see which way price is going to go. Now, ultimately, price sold, which I understand completely why. So when it sells, I'm going to explain why it did. So what we're going to do is we're going to let the replay play. And we're going to see exactly how price. Oh, and one more thing. Then, of course, I turn on my Delorean EMA indicator and then I wait for the cross as well. So wait for that cross and then see what happens. So now let's play the replay. So obviously they bought price up to fill that area so they can mitigate this last impulsive move that the sell did. Now, the mistake I made was I started to think that price was going to buy up. I really didn't want to put in the order, but price was steadily pushing up and then the next candle kind of closed above. So I said, well, maybe it is going to buy up and fill this area. But then that buy candle turned into a fake out. So I went ahead and closed the trade. It was, it was a negative, let's see, let me look. It was a negative $28 trade that I lost, but I decided to go ahead and close that because I knew I can get it back. No worries. So then price ended up tanking down, then looked like it went up for a while. Then all of a sudden price started pushing down. And then at this point, I was just watching for price to come down. And so ultimately price smashed not only my first take profit, but really it just went all the way down and mitigated this area. And I'm going to explain my theory on that. But typically I actually got in a little bit earlier. I kind of got in here before this entry point, but I definitely got all of this here and it smashed both of my take profits that I set. I believe I set one here and then another one there, but it smashed both of my take profits and I can show you that. But ultimately price sold and went all the way down to here at this point, but it went down even further. Now here's my theory why. So when you look over here, okay, and I'm going to circle it. When price bought up from this zone, right, it created all this imbalance, right? And so price had to eventually come back down to fill all this imbalance. Started from here all the way to its highest here. Now, of course, this zone got mitigated, okay? So that was filled up. So now that they did all that to cover all the imbalances that all these moves created in here, they ultimately had to address filling in the imbalance from here all the way to here, okay? All right. So they had to mitigate that area. but price wasn't done. It actually went down further, and I'm going to show you. I think it went down further, if I'm not mistaken. Okay, I was wrong. So price actually, it did sell a little bit more down here, but ultimately price came down and mitigated this area, which we actually could have drew a zone right actually in here. So I could even move up this zone right up in here. All right. So yeah, so price actually came down, and this was a total of over 1,200 pips. Okay, over 1,280 pips. So we did really good, analyzing this market, and the market drops. Okay, and that's how I won this trade. Now I'm going to show you right now on the phone. All right. So when I took that buy, like I showed you, this is when I actually went on ahead and got into negative real quick. So I just went on ahead and closed it, minimized my loss. So then I jumped into that sell. And this was my first partial trade that I closed and made $38. So I recovered my loss and then made an additional $10. Okay. Then my second partial trade closed out at $25. So far between last week and this week, I profited $249. So that's how I was successful with this trade. So that's how I won the trade today. And that's how I actually marked up my charts and did what I wanted to do. So when you understand, basic market structure and basic retail trading, and then you start learning about institutional trading that we do at Tradenology and Trading Pro 5000. This is what's really going to take your trading to the next level. And then you're going to be able to create that financial freedom that you wanted to create and fire your job. But that's it for this back testing session. I'll see you in the next one. Take care. Bye.